welcome to the weekly livestock market update. I'm Brownfield anchor reporter Megan Grevner with us as always to talk all things markets. University of Missouri's Scott Brown. Good afternoon, Scott.
Good afternoon, Megan.
Happy Friday to you. It's a very dreary and rainy Friday here in Kentucky, and I am not complaining at all. We've been about 3 months without significant rainfall, and I'm sure some rain would be welcomed in your area as well.
For sure. We went from 80 degrees yesterday to upper 30s today. So quite a temperature swing and a little bit of rain as well overnight.
I'm sure much welcomed as well. We are headed for a cold snap here quickly, but I'm not sure anybody would have thought November 11th and we'd still be seeing 70 plus degree weather in parts of the country, in the Midwest, at least.
Yes.
All right, we're going to get into a little bit of supply and demand today. We're going to talk retail prices and consumer sentiment. But to kick things off, let's recap what happened this week in the markets.
Yeah, Megan, this week on the cattle side of the equation, cash-fed cattle were up about 80 cents this week. Those feeder cattle markets were anywhere from steady to $3 lower on the week. The December live cattle futures contract was just up 10 cents. While the January feeder cattle contract closed down a little more than 90 cents this week. Choice box beef prices were down about 34 cents, so not a lot of change on that front. If we go to the hog side, cash barrels and gilts were nearly $2 lower this week. The December lean hog futures contract closed up $1.25, and the pork cutout value was down $1.14, really led by lower bellies and loins this week.
It really kind of has been another at least on the cash hog side of things, another sluggish and kind of soft week for the markets. At this point, being a couple of weeks in a row dealing with this, are we concerned about what's going on the cash hog side of things?
So potentially, we have to be paying attention. I'll say when you look at some of the things like bellies down again this week, maybe loins that continue to slide lower. You kind of wonder about the demand side of the equation just a little bit, given where cash hogs have gone. I don't want to be too much of doom and gloom, I guess, at this point. But again, I'll remind us that there were some risk management strategies a few weeks ago that could have played very nicely. And there is downside risk in these markets, especially with what could be the potential for even weaker economic growth as we look into 2023 that we want to protect against.
And I think I'm not sure how much we can talk about the LRP program, but definitely something that producers need to think about and consider as they're having those conversations and looking ahead to the upcoming year. Also taking a look at what's going on the input side of things.
For sure. So I keep saying, so we've been at high input costs and high revenue, if you will, relative to some historical standards. And to me, that adds to the risk because it's just a lot more dollars you have out there in getting 100 pounds of whatever product it is to the finish line. So I worry about that added risk that comes from just the sheer increase in costs that we've seen of late.
All right, let's talk slaughter numbers as we take a look week over week. How are we looking this week in terms of cattle and hog slaughter?
Yeah, if we start on the cattle side for the week ending November 12th, USDA tells us it's a run of 671,000 head of cattle this week. That's 4,000 head above where we were a week ago and 12,000 head above where we were a year ago. However, on the hog side, a run of 2.492 million head this week. So actually down 85,000 head from where we were a week ago. So a lot weaker run there. And that's 128,000 head below where we were a year ago.
As we take a look at that year over year comparison, still running ahead on the beef side and still trailing on the hog side of things.
Yeah, that's right. So 1.6% more cattle slaughter year to date. Thank you, beef cow slaughter and heifers in the feed yard, while we're talking about hog slaughter that's 2.9% below when we look at the year to date numbers.
Supply and demand numbers, as we take a look at those came out this week. Are we really surprised what USDA is doing are there any surprises, I guess is probably a better way to put that, with what USDA is doing in terms of beef production?
Yeah, so I don't know that it's surprises, but we have been seeing them steadily increasing 2022 beef production. So the year that we're in, even though we're sitting here in November with nearly 11 months under our belts at this point, USDA made another increase in November beef production of 211 million pounds. That just reminds us that we continue to see liquidation going on that's pushed beef production higher. USDA, in fact, for 2023, revised their November projection down 90 million pounds from where they were in October. So the more we slaughter now, the likely the deeper the hole is as we get to 2023 and 2024. So none of that really surprising. Increased fed cattle prices $2 a hundred. Talking about now $1.56 for fed cattle in 2023. They also raised the current year's 2022 price by $1 this month to $1.44. Feed cost side, not a lot of change. Soybean meal prices, they did increase $10 a ton to $400 in this November WASDE.
We've talked a lot about the potential for cattle prices into 2023. I think it's interesting as we're seeing those projections and those adjustments there, but also taking into consideration what's going on the consumer side of things and how much does demand play into our ability to see these higher prices in 2023.
Yeah, so I keep saying I still think we're going to see, much higher prices, but the more I see weaker economic activity in the year ahead, or at least projections of weaker economic activity, the more I might get concerned about the downside risk here. So we want to be paying attention. Again, I'll still say I think we're headed for much higher prices, just the volatility. And here's one in cattle where we have both sides, frankly. I mean, supplies could get tighter than what USDA is suggesting. I mean, you look at beef production, it's 28.4 billion pounds for 2022, according to USDA, and their projection for 2023 this month is for 26.3 billion pounds. So a decline of 2.1 billion pounds. We don't do that very often in the industry. So we're certainly talking about much tighter supplies, and it's just, is demand so affected by lower economic activity that it offsets. It's just so much volatility probably in the year ahead.
Let's get into the retail price picture. As we take a look at these numbers, how are they shaping up for consumers at the grocery store?
Yeah, so a little bit of a mixed bag here. If we start with the retail choice beef price for October of 2022, it came in at $7.42 a pound. That's 6.1% below where it was a year ago. And when you look at September's estimate of $7.60, we lost several cents here over the last month in terms of retail prices. Now, I think that comes in terms of a mix of the products. We didn't see it so much in all those prices, but a little weakness there. Yet on the pork side, the pork retail price, $5.05 for October. That's 4.8% above where we were a year ago, and a nickel higher than where we were last month. So we're kind of been staying on this slow but steady rise in pork retail prices. The sliced bacon price that was $7.38 a pound in September rose to $7.61 in October, to give you a little bit of mix of the flavor of increases here.
How is that faring for, we're talking about higher retail prices in some instances and some lower. How does that kind of like break out when we're thinking about consumers and what producers are receiving also, and how does that mix together?
Yeah. So I think we're seeing again signs of consumers buying down. So I always say buying less steak. So the boneless sirloin steak price is down about 10% relative to a year ago. Yet, when you look at ground beef, it's actually up 1.2% relative to a year ago. So maybe that beef purchase is becoming, some of the less expensive cuts. Beef roast down 6.1%, just to give us a little bit of flavor here. Now you go to the pork side, and I'll say bacon prices 4% above year ago levels. And you may scratch your head and go, but aren't consumers buying down? But I'll sometimes say, if you're going to go buy a hamburger, you're likely going to want to put bacon on it. So I don't think it's as straightforward as the beef discussion in terms of some of the what we're seeing happening on the pork side. And I will say boneless ham prices are almost 14% above where they were a year ago. And I think that's a little more driven by what we've been doing outside the United States, but quite an interesting difference in terms of how consumers are reacting to what I believe is a budget for many of them that's a little tougher than it's been for a while.
Anything else you want to touch on in terms of retail prices?
So I do think there's as we think about farm to retail prices, I think there's a discussion that needs to continue to be focused on. And Meg, I'm going to share my screen here with you for a minute.
This is like a first here. Scott Brown, the economist, is coming to the conversation with tables and graphs.
That's right. All right. So you just never know what you're going to get from me on a Friday afternoon, right? But if you look at, so we've had a lot of conversation, especially in cattle markets, about the farm to wholesale spread. So the left graph that's here in this Excel spreadsheet, and you can see periods of time where that blue line, especially for beef, was very high relative to historical standards. But if you look at what we've been doing of late, that blue line, frankly, is back to where we were almost pre-COVID, if you will. The plant fire shows up in late 2019 in that blue line, but it's a very different picture. So that's changed a lot. Pork margin farm to wholesale has also been weakening as we've gone through 2022. But for me, the right-hand graphic here is the one we need to be paying attention to. It shows the increase from wholesale to retail. And for me, this is labor, energy in terms of transportation, packaging. I worry it's hard for us to get those margins on the right-hand side, the wholesale to retail margins for beef or pork, to come down to where they would have been pre-COVID anytime soon. But maybe I'll be wrong, but that I think that's worth watching, especially as we talk about what happens to producer prices, especially when we're looking at those relative to retail prices.
It definitely is interesting. And it's, we can talk about it and try to visualize it, but to look at these graphs and to actually see them and see how they're moving is really kind of eye-opening in terms of what we're seeing and what's going on price-wise.
Yep, for sure. And again, we'll see what happens, but boy, it's certainly been a change from a discussion of farm to wholesale to one of wholesale to retail.
Scott, as we kind of start to wind things down, consumer sentiment, last report that came out this week, and really not a number that anybody wants to see.
Well, that sure was a Debbie Downer of a report we got.
Sorry. Somebody has to deliver bad news. Today it's me.
So the November index of consumer sentiment fell nearly 9% relative to October, 19% below where we were a year ago at this time. So it's not surprising when you see the two components of that index, the current situation index down 12% month over month. Higher interest rates, more worries about the general economy. I think both really hit hard on that current economic conditions index. Perhaps we're going to get some recovery when we see the December numbers. We'll have to wait and see how things play out here. But higher interest rates, I think, are really starting to get consumers' attention, and it shows up in the consumer sentiment index for November.
I think it will be interesting. I know that there's been kind of an uptick this week in the markets that will be interesting to see if one, that holds, and two, maybe how that carries over into consumer sentiment as we look toward the next month.
For sure. I think just because we've had a good stock market week for some consumers, the pressure's still there.
Before I let you go today, just kind of a high level, interesting midterm elections this week. It's appearing that we're going to have a Congress that is divided in the houses. Things are still up in the air, so I'm not pontificating anything with any more knowledge than anybody else's. How does that shape up as we start to have conversations and continue conversations about the 2023 Farm Bill?
Yeah, well, so number one, I'll say no one's focused on the 2023 Farm Bill until we figure out who's in control of the House and Senate. If we end up with Republicans in control of one or both of those, it probably makes life more difficult to get something done in 2023, just because you're going to have different ideas about some of the major features, whether it's Title I program spending or food stamps, et cetera. I mean, I think you're going to have some different philosophy there. I think the elections have only probably just reminded us how much uncertainty there likely will be in trying to get a farm bill done. There's been a lot of folks out saying they want to get something done in 2023. I'm kind of waiting for what's the problem that develops that forces that to unfold in 2023. And I guess I say that going, we might get a straight extension for a year. Who knows? It seems right now there's probably not enough pressure. When I think about general farm income for 2022 being at a record level, and yes, calling for lower farm income in 23, but still relatively high, I'm not sure we're going to get a lot of folks clamoring for a farm bill because they're just not too worried about where they sit today.
That will also leave us plenty to talk about in the next 11 months.
We will see a lot of debate about the Farm Bill. So I certainly think there are a lot of folks that are going to try to get something done. Getting it done might be a little tougher, and we might roll right up against October of 2023 with nothing done yet. And, so we'll say, I remind us of the previous times where we've kind of run up against some deadlines relative to farm legislation. We've often talked about permanent legislation, what it means. Sometimes the old dairy cliff of much higher support prices for dairy was talked about. There's a little different situation given the 2018 Farm Bill and how it was done. So there may be a little less pressure than we might have seen in the past to also get an extension done at the last minute.
Because I don't think and I know we're running out of time here today, but I don't think the 12th Farm Bill or the 18th Farm Bill were done in the years that they were supposed to be.
That's right. So you remember all of us economists, right? We'd say 2012 and exit out, 2013 and exit out, and we finally got a 2014 Farm Bill done. So we'll get a Farm Bill done when we get 218 in the House, 60 in the Senate, and a non-veto. So
I can read between those lines. God, that'll do it for us this week. Really a kind of a slow week for us next week. And just cattle on feed. Any thoughts as you're looking ahead to that report?
Yeah, so placements, are we going to really start seeing the hole that we started to see out of that last report? Will that continue? This starts to set the stage really for what we see mid 2023 and could help us decide where prices go, how high potentially they go as we get into 2023.
Placements, and more placements. Scott, always great to see you. We will see you next Friday. I will be in Kansas City. I don't think you will be, but we'll catch up. Our paths will cross one way or another.
Sounds good, Megan.
So have our weekly livestock market update delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments there. And the Market Minute is back with John Perkins. Go to brownfieldagnews.com and check out Brownfield TV for a recap of what happened today in the markets. Have a great weekend. I'm Megan Grevner for Brownfield.